pick of one of my all-time favorites, Align Technology here. The company makes Invisalign braces is right in the blast zone of the pandemic. It's hard enough getting a dental appointment for something essential right now. Anything elective, well, forget about it. Teeth straightening, off the table. Now, Align was already facing real competition before the virus hit, which is why the company issued some tepid guidance in January. Then the lockdowns went into effect. The stock was eviscerated, plummeting from 277 at its February highs to 128 mid-March. Since then, though, this stock's made a comeback, especially as Wall Street's gotten more sanguine about betting on stocks that should benefit as we came out of quarantine. Then the company reported, again, tepid numbers. Let's call them that last night. Nobody really cared, though, about the sales and earnings miss. We all knew the first quarter couldn't be good. However, management, to some degree, gave mixed commentary on the state of its global operations, and the stock declined 2.6% today. So should we be worried here, or is this just a predictable pullback, given how much the stock had run in recent weeks, a lot like the stocks that I talked about at the top of the show? Let's take a closer look with Joe Hogan, the president and CEO of Align Technology, to learn more about the quarter and the company's process. Hey, Mr. Hogan, welcome back to the show.
Hi, Jim. Thanks for having me. It's good to be here.
Hey, Joe, I got to tell you, I figured you were going to have just a terrible quarter, frankly, because you can't get in to see a dentist unless there's something that requires you. Well, I don't even know how you get in. And everybody knew that. We almost have a healthcare recession because everything that's elective is off the table. How were you able to pull off this number, which I regard as very solid, given the fact that you're not supposed to go to a dentist to get your teeth straightened?
Well, Jim, the first thing is, we have a real-time business. We carry no finished goods inventory, so it's real time. We're a mass customized business. So we were cruising along outside of China. We were moving along really well and actually ahead of guidance up until mid-March. And that's when the market really fell out from underneath us, and about 70% of the dental offices were closed around the world. And so it was a really mixed quarter. It was a really strong quarter going into the last 2 weeks, and then it just fell down.
Yeah, but I think you could say that China, it's a precursor. China was bad at the beginning. I know it's not as big as America, but China came back. And I would think that when you open up the electives, it's going to be the same in this country.
That's where we're optimistic, Jim. China's the only mark we have right now because they were first into the tunnel and first out. And remember, China's 8% of our business. It's a very important part. And when you look at, you regress January before they went in, and now our order rate is 80 to 85% back in that sense. And not all the areas of China is back. Beijing has been slow, and Hubei have been slow too. Shanghai has been strong. Coastal provinces have been strong. So I'm optimistic about that, and it's a good vector for our businesses as we look at the western side of the world coming up.
Well, Joe, I would talk about Align in a different way than I typically would. I love to talk about it because, my daughter loves it, and everybody in the selfie generation. I want to think of you as a lot of what happened in Microsoft last night with Satya Nadella. He said, every company is now digital. There's no choice. Every company. Now, I was speaking with Mark Benioff before this show because I know that his kids have Invisalign, but more important, Salesforce has worked directly with you to become more digital. You are the most digitized company of a company that I've seen last that wasn't, so to speak. Tell us about the revolution of digital that you're doing.
Well, it's all about, we really want a digital format that we have. And you think, Jim, we have an end-to-end solution from our iTero scanner, which your daughter knows from the time that you're scanned, all the way to the 3D printing of those aligners. And that digital platform is so important. And I'm glad you mentioned Mark, too. We're big Salesforce fans. When you look at how, they've gone to the cloud, have they moved us to the cloud, we move our system to the cloud, too. So an end-to-end digital solution. And what's wonderful about this now, too, is that before these things were nice to have, because it's a lot less invasive procedure from an orthodontic or dentist standpoint than with wires and brackets or traditional ways of analogs that go in the marketplace. With a digital solution like this, you just put patients and doctors and employees less in harm's way. You don't have to visit the doctor's office the most. And so where we were touting this before as productivity and good for patients or whatever, we see it almost as a necessity as we come out of this COVID world.
Well, do you think there'll be a burst of pent-up demand? And do you think the dentists have enough PPE to be able to handle it?
Well, we're making PPE for our dentists too, so we have some downtime in our printing labs right now, and we put together thousands of those things that we're sending out packages to our doctors, and we have access to PPE too, so we think we can help that way. I think there will be a surge in demand. We've had a really strong balance sheet, Jim. We haven't had to make any cutbacks. We haven't lost on capacity piece. We've been able to leverage that too, and we're really prepared for a surge if things come back in that way.
I think it is important that you've clearly made a bit of a no layoff pledge. You're not, if anything, you're probably adding people.
Yeah, in fact, we just added 50 salespeople to China. There's some engineering we had to add too, and we're selective in that sense and responsible. But we gear this business to grow 20 to 30% a year. And like I mentioned before, no finished goods. You have to be ready to be able to address that demand. There's no buffer between you and your patient base and your doctor base.
All right. So between the exocad acquisition and the digital work with Salesforce, can I take off the table the idea that, say, another company can come in with a knockoff, so to speak, and somehow take companies away, given how proprietary a line is versus where they thought you might have been 2-3 years ago?
Yeah. Jim, there's two parts of that equation. One is from a knockoff standpoint. One is just markets vastly underpenetrated, right? There's 300 million patients out there that want this. Even in the orthodontic segment, the 14 million patients, we're still less than 10% penetrated in that sense. So the demand profile is huge. Secondly, is what's missed is how hard it is to do what we do with this digital platform, end to end, from scanner to the algorithms that are needed to 3D printing and make that work. So I think sometimes on the market, they see someone can make a plastic aligner. There's so much behind, so much software, so much technology behind that piece. It's really hard just to knock us off.
Yeah, I really think it's you put a lot of distance between you and your competitors. Joe, great to see you on the show, and thank you for the no layoff pledge. That's terrific.
Thanks, Tim. Great to talk to you. Thanks for having me.
That's Joe Hogan, Align Technology President and CEO. I haven't felt this good about this company in a long time. I need to see that moat built. I need to see some distance between them and everybody else. Mad Money's back after the break.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.